This episode is sponsored by Lupton Capital, which provides a variety of investment services to both retail and institutional investors on platforms such as Seeking Alpha, Substack, and StockTwits. For more information on these services or for links to those services, please visit luptoncapital.com. Hey, everybody. Welcome back to the Investing with the Whales podcast. I'm your host, Jonah Lupton. Super excited for my next guest. I follow this guy on Twitter. He is a wealth of information, and he's kind of the godfather of what he calls social arb investing. It's Chris Camillo. He is the co-host of Dumb Money on YouTube. Also wrote a book. He's also featured in Unknown Market Wizards. Chris, what was the name of the book again?
My book's pretty old now. It's Laughing at Wall Street. Probably still find some copies on Amazon from 2011. I always say if you want to read about my methodology, even though I have my own book, Jack did a way better job in a single chapter of describing what I do in Unknown Market Wizards. So I'd almost push people to his book.
So how would you describe what you do? What is social arb investing?
Yeah, it's super straightforward. It's almost like a modern, pure interpretation of what Peter Lynch did back in the early 80s. It's essentially trying to detect change in the world a little bit early as it's actually happening. So when I say change, it could be a shift in culture or a shift in consumer behavior. It could be something as simple as a trending product that you see on TikTok, right? So you try to detect that change in real time as it's happening, and then you connect the dots to investable opportunities in the market. So it's really that simple. You enter an investment at the point of what I call you enter the investment when there's like a mismatch of information saturation, when you detect something that the market hasn't seen yet, and you exit that investment at the point of information parity, basically when the rest of the world finally sees what you had seen days, weeks, months earlier, right? So it's a very simple methodology of trading information, not financial information, actually trading information and things that you observe in the real world, which used to be for me kind of similar to Peter Lynch, going out and observing the world in real time. Now, thanks to social media, I do 99% of this online, comments on TikTok, Twitter, Instagram, Reddit, and again, not places where people are speaking about stocks, but places where people that are outside of Wall Street are just talking about their day. What are they interested in? What are they watching? What are they buying? What are they eating? What are they doing? How are people's lives and interest and passions changing on a day-to-day basis? And as ordinary people that don't work on Wall Street, we're actually way more embedded in that world than your average middle-aged, wealthy hedge fund manager or
living in New York City in a penthouse.
Yeah, because listen, we live all around the world, right? Like we live everywhere, and also I hate to say it, but it's like we're not dealing with the amount of noise and herd mentality that if you happen to work on Wall Street or in that business, there's really no way to avoid it. It's just there. It's part of your job. You see it and you hear it all day long. Our conversations are with non-Wall Street people in the real world, right? Like we're ingesting social media and able to see the world change in real time. And so it's not really that simple. There's obviously steps to it, and that's kind of what I discuss in Jack's book and my book and what I discuss on our YouTube channel, Dumb Money Live. Just going through the steps of, is what I'm seeing really meaningful to this company? Is it a needle mover? And if it is, to what extent do other people in the world and people who work on Wall Street already know about that thing or not know about it? Or to what extent do they really fully appreciate what's happening? And, the next step is, well, is there something else happening at that company right now that's more important and more impactful than this piece of information that I found, right? And if you kind of go through those steps, And the answer is yes, it's really meaningful. There's nothing that's more meaningful this quarter. And really, for the most part, people are not aware of this yet. If you can go through those steps, then you kind of found yourself a trade.
Now,
And that's what I've been doing for.
Over the last 15 or 16 years, you told me you've turned 20,000 into 60 million. Let's go back to 2007. What were some of your early big winners? And when you say you're looking for a mismatch, a trend, if you get into something, how long are you planning to hold it?
Yeah, so that's a great question. So I plan to hold it exactly how long until other people see what I see. In some cases, that could be hours or days. In other cases, it could be weeks or months. So I don't define my holding period by, it's not predetermined. Now, often, the information that I'm trading tends to come out, when a company reports earnings. That's if no one else had seen it yet, right? These days, professional institutional traders and hedge funds primarily rely on transactional data sets to detect things earlier than the general public. So what that means is that hedge funds are essentially ingesting credit card receipt data and other sorts of transactional data. They have to clean that data, they synthesize the data, they interpret the data, and then they ultimately make investment decisions based on, okay, this company is selling more of this product than they were last quarter. So they're able to actually place their bets before earnings based on that transactional data. So as individual retail traders, we have to figure out a way to beat them. So, utilizing this contextual data set of speech and what people are saying on social media, it's what they're thinking in their head even before they buy it, or as they buy it, or immediately after they buy it. But in any of those cases, you're beating the transactional data by days to weeks. So you have that edge. So often when I see something, I know I probably only have a few weeks until Wall Street picks up on that in the transactional data. And then there'll be a big lift in that stock. And sometimes you'll even see that data getting reported in research reports, right? That are ingested by institutional traders. And that's before earnings. So I can often exit before earnings, which is really nice, because if you get the lift or the correction in price based on that new information that you found before an earnings event, and you're trading options like I occasionally do, you can purchase options that expire before earnings day, which means that there's a lower premium. So you could actually make a higher multiple. So it doesn't always work out, but sometimes it does. But again, I don't really know how long I'm going to be. Sometimes I have a hunch. I'm like, this information is so big, there's no way they're not going to see it within a few days. And then we'll see the stuff. And often it happens.
I mean, something similar is back in, I go to the gym every day, and I've been seeing more and more people wearing the On running sneakers. So I finally dug into the company back in January, started a small position, and then they crushed numbers, crushed their Q4 numbers, raised guidance, and the stock rallied 50%. That was just from looking around and seeing so many more people wearing the sneakers than a few months ago, or even 12 months ago.
That's it. So Dumb Money, like we've been talking about On for well over a year and a half now. We've been like, we wouldn't shut up about it. Like we're like, On, and people are like, oh, what are you talking about? Same thing. And by the way, it took a long time for that to finally be reflected properly in by Wall Street.
So that's the next
success.
That's what I was going to ask you, is how much do you pay attention to valuation? Because it was probably the valuation, the company came public at a pretty rich multiple, and the stock had to, absorb some of that.
And the valuation is a reflection of what the market already knows. So in the sense of On, the market kind of had a lot of hype behind it, but our interpretation was not only do they have the hype is real, and it's even bigger than the market thinks, right? And it took a while for that to play out. Meanwhile, you have a company like Hey Dudes,
Right.
right?
Crocs.
So
Yep.
this is a company that, it's convenient having a shoe wall behind you, but this is a company that I've been talking about for years and years before they were acquired by CROX. And I was like, gosh, I wish I could invest in this company as a standalone, but they were private. And then the second that CROX announced the acquisition and the CROX tanked based on that, I was all in on. I mean, CROX was my biggest trade of last year because I knew about this company and I also knew that nobody on Wall Street had a freaking clue.
Oh yeah, Wall Street guys aren't wearing Hey Dude sneakers.
They're not only not wearing it, but on paper, it looks like the dumbest company and the dumbest acquisition of all time. And the thesis that Wall Street put out, which I don't necessarily blame them because they're too lazy to do their real homework. The thesis they put out was that Crocs was a pandemic shoe. It was an ugly shoe that was comfortable and people wore them during the pandemic. But now that the pandemic's over, Crocs is going to crash. They know it. The management knows it. So they're desperately trying to go out and acquire growth through this weird acquisition of this junky shoe that no one's heard of. The reality is the Crocs management team is exceptionally savvy. Been following them for years. One of the savviest management teams in the entire world.
Yeah, in retail. I mean, I have a position in Crocs too, so I agree with everything you're saying.
Yeah, and I don't have any position in Crocs anymore. I was mostly exited a few months ago, but they knew what they were doing. They saw what I saw and everything they were saying. I was like, they get it. They see it, man. This is real. I went all in on it. And again, that's something that anybody could have seen. All you had to do was watch 60 or 70 TikToks of Hey Dudes and read through 500 or 600 comments. And once you read through 500-600 comments, it becomes pretty evident that this is a cult brand.
Or go to a college campus or a high school and see everyone wearing Crocs.
Well, that as well, right? And yeah, and I have middle school kids, and Crocs was the hottest thing ever, right? The last couple of years, and I exited my position in Crocs a few months ago because it felt like the world was starting to fully appreciate everything I had been talking about with the Hey Dudes acquisition. And before that, Crocs is not just a pandemic shoe. And that's exactly how it works. I mean, I can tell that story 40 times over with 40 different brands, and it's all very similar. It's like one of my favorites to tell is, Victoria's Secret, when I would short that company, because, we were seeing this trend emerge with bralettes. And for people that don't know, the bralette is basically a cheap, unstructured bra that doesn't have wires in it. So it cost about a third what a structured bra cost. And it was a mega trend, happening at about the same time as the no bra trend happened. Those are two terrible trends for Victoria's Secret, because Victoria's Secret built their brand around structured, wired bras, right? And so they basically barely even sold bralettes at all in the beginning. And once they realized that this trend wasn't going away, it didn't matter because they started selling them, but you can't sell them for the same price and margin as a structure bra. So you have part of their customer base that's like, I'm not even wearing bras now half the time. And you have the other half who's like, well, I'm going to start wearing bralettes half the time. Because they're more comfortable and now it's kind of socially acceptable to wear them. So why not? And they're cheaper. Well, all those things are a disaster for Victoria's Secret. And that was not the entire reason, but a big part of their multi-year collapse at Victoria's Secret. But again, it's seeing something in the real world, analyzing it, understanding that it's meaningful, measuring the degree that it's meaningful to a company like Victoria's Secret. And in that case, it was meaningful in a negative way. Right.
So you're also looking for trends that are dying.
So I don't even look at trends. I just look at I look at change. I just want to know what the world is doing at any moment in time. And often people, I've had people say, oh, you're a futurist, or you're just you try to predict the future. I'm like, absolutely not. I mean, it's kind of fun to do that sometimes, but 90% of what I do is not trying to predict the future. It's trying to decipher the present, right? And so it's if I can decipher what's happening right this second, that is all you need as an investor. You don't have to try to figure out what's going to happen in 6 or 12 or 18 months to be a great investor. You just got to figure out what's happening right now.
Now, I'm assuming you don't have a diversified portfolio. By traditional standards, you typically get pretty heavily concentrated in one or two names.
Yeah, I'm kind of like, that's where I'm a bit of an anomaly, and I don't, I'm not a financial advisor. I always tell people on dumb money, like, I'm not, don't do what I do, right? Like, you can take some of the thinking and incorporate that into your own thinking. And, for most people, most of the time, it's probably appropriate to have just a diversified, efficient portfolio. But if you could just mix in a little bit of what I do, just mix in like once every 2 years, if you just detect something from social media or from your life, and you do the research and you just go through the process that I teach, you're not going to win every time, because there's no such thing as a sure thing in investing, because there's always variables, that some of those variables are really impossible to see. Like, if it's a small cap company, maybe there's a majority investor that they've been looking for an exit point for years. Right. And even on their best earnings, they're going to use that as an exit point and all that liquidity. And, the stock might be flat on a day when it should be up 15, 20%. And then you have options, so you lose. So you can't predict everything, but like, if you could just go through this process once every few years, the gain that you'll make on that single trade balanced with a diversified portfolio, that's going to put you in the top 1% to 2% of all investors in the entire world, including all institutional investors. So like, you don't need to do this every day. Like I'm crazy. Like I spend on average now 3 hours a day just trying to detect and surface change in real time. Right? I'm just, like siphoning through thousands of TikTok comments. I have a very methodical process that I go through every night.
Do you have anyone helping you? I mean, I know you have your two co-hosts on the show. Do you guys sort of do this stuff together and share your intel with one another?
Oh, better than that. I mean, I have a Discord, and like I said, one thing with us, like, we don't do this for money. Like, we don't even have, like, we don't take $1 from our YouTube community. We don't take sponsorships. I'm one of the only people that I know of in finance YouTube that like patently rejected FTX money when it came to, but it wasn't because of them. We just didn't take money from anybody, so it worked in our favor. But I have a Discord community. It's dumbmoney.tv/Discord. Okay. And there's 40,000 of us in there. Wow. And it's not like we just hang and like we all have, like, I mean what I'm about to say. My community probably contributes more to my trades than I personally contribute. So here's a great example of that. In the year and a half of the pandemic or whatever, when we're all sitting at home trading, I think I made 30 million in like 14, 15 months trading. And I kind of did a rough calculation, and about 65% of those returns were generated from either ideas that were initially sourced from my community, or ideas that maybe I threw out there, but they did an aggressive amount of research and helped me vet them and help instill the confidence I needed in that idea to actually go all in on that trade.
What were some of your best ideas from back in the pandemic?
Dude, it started off, it was just me. Like, so the pandemic trade was started in February of 2000. And I had detected coronavirus coming out of China, and it was very early. Nobody cared about it. No one was talking about it. And I thought I was going insane, because I was like, clearly it's a pandemic. Clearly there's no stopping it. We can all have our opinions, on COVID and all. That's irrelevant.
Yeah.
It was very clear that it was coming like a freight train, and every country on earth would have to react. And I did not see a scenario where the knee-jerk reaction wouldn't be total and utter destruction on financial markets. So, and specifically travel stocks, obviously. So I basically had two buckets of investments. I shorted the market in general, just the SPY. very easy short. And I bought put options on the SPY that were weekly, like 1 week at a time. And then I bought put options on a few travel stocks and a few casino stocks, because I figured, like, I was in my mind, I was like, pandemic, what's the absolute worst place? You can't be in a casino touching machines. I was like, this is like very, very early.
Vegas turned into a ghost town during the pandemic.
Yeah, I mean, just so you know, there was so little information on this in the US at that point that I was actually translating Chinese blogs and newspaper articles from China into English so I can try to figure out what was really happening. And so I lost so much money over like a 3-week period when the market just it was like, what's happening? Like, this is, how do you not, like, I don't watch CNBC. I don't ingest really financial news flow, but I had CNBC on 24 hours a day, just kind of waiting for them to start talking about this, because I knew that would be a reflection of finally they're picking it up. And I'll never forget, there was one day that the market dropped 2%, or like over a couple days or something. And CNBC got on there and they're like, this is the buying opportunity that we've been waiting for. Like this is it. Because we were like trading at like all-time highs, right? It was like, it tapped off 2% on the coronavirus threat. And they're like, oh, this is unbelievable. Like, I remember all of them, every one of them were just like, this is it. I almost like busted through my TV. I literally almost put my fist through the TV, because like, dude, how did they not see it, dude? And so I lost more money. And then it was like, I think it was the following week.
I forget what sparked the big sell-off. What was the big event?
There wasn't a big event. It was a daily thing. It was like every day there was more and more evidence, like more and more. So
more cases in the US. And then once people started dying.
Yeah. So here's what's really important to understand. And this is more of a philosophical thing. But so our minds will not allow us to really accept or believe things that are like first-time events, super anomalies, what we call black, like Nassim Taleb will call it, his book Black Swan, if you've ever read it, right? It doesn't allow us to process and really believe in the statistical likelihood of that thing happening.
Like a
and
pandemic.
So like it's just like we didn't believe it could actually happen.
Right.
And so
we
even
have
when
the
it was
best medicine in the world, we all have, vaccines and trillions of dollars in our healthcare system. How can we have a pandemic?
Yeah. But so no one believed it until it was so right in front of our face. Like it amounted so much. Like I went to a dad's dinner in my neighborhood with dads of kids that are friends of my kids. And I literally I turned this whole steak dinner into a conversation about what was about to happen. And I convinced 3 of the dads to go out and buy freezers and put them in their garage because there's going to be a rush on food. And like 3 weeks later, I got phone calls and they're like, how the hell did you actually see it? Like they were so stunned that it actually all played out how I told them it was going to play out. So anyway, what happened was the market eventually did tank. I kept putting more money into these puts every week. And when it hit, it hit. And I made more money, honestly, in a few weeks than I had made in many, many, many years, even with my insane returns. And I was like, dude, it was unreal. I was just on fire. I was sleeping 3 hours a night. I was like, this is it. Because remember, if my entire methodology of observational investing or social arb is totally dependent upon monetizing change that's happening in the world, we will likely never see a degree of change more than what was brought on by that pandemic. A change in the way we live and the way we work and the things we buy and the things we do, right? So every one of those changes had implications for sectors of the economy and publicly traded companies. And some of them it was hugely beneficial and some of them it was terrible for. So initially, it was a pretty easy trade shorting travel stocks, right? And shorting the market in general. And all throughout that time, though, I was analyzing stocks that I knew would actually be beneficiaries of this chaos, that the market just blanket sold off because when people freak out, they just sell everything, right?
Like so the Zooms, the Shopifys, those kinds of names.
Amazon, Peloton, right? Like the companies that, as this was happening, these companies could not even handle the demand, and yet they were going down because
Right.
it was like, just sell everything. So I knew that I would essentially take all that money and just go long on all these stocks, but I was waiting for the reversal. And I knew I wouldn't be able to time the bottom. I'm not a macro guy. I'm not a guy that claims to be able to time markets. I can't tell you the market's going to go up or down this year or this week, and I would never try to do that. But I figured once the market actually turned around and it's just kind of showed a meaningful uptick, I would make my switch. And that's I basically made the switch from ultra levered long to ultra levered short,
Sure. Right.
ultra levered long on these like 8 or 10 companies exactly 2 days after the market hit the after we bottomed. And I also knew that at the time, the reason why the market bottomed and came back was actually for a really solid reason, is that we were just going to pump so much money. I
Brilliance.
mean, and most people don't understand the impact of it. I do understand the impact of that. So I was like, okay, this is it. They literally, we're good. We're good. And I then had the greatest 8 months of my investing life, basically hand picking companies. Like, remember the work from home trend was benefiting, companies that made, video cameras, like that go on your computer, and just computers in general, and like the vacation in nature trend. Like I was investing in boating companies and RV companies, and like I was calling like jet ski dealers and talking to them about like what's going on. Like, dude, it's insane.
Right. You couldn't even get jet skis. You couldn't get bikes. I mean, there was just so much demand for that stuff.
One of my biggest trades, percentage wise, just straight up, was a company in Canada that owned a few big bicycle companies. Schwinn was the biggest, but it owned a bunch of them. And they also, I think, owned bike helmets, but like it was a small cap out of Canada. They did that in like baby seats. It was a company that no one would ever want to invest in, like ever, except during a pandemic when there were lines around the street to buy bicycles. And you're just like, oh, dude, I think that company went up like 7x over a very short period.
I mean, look at a company like Nautilus that makes fitness equipment. I think that stock went up, probably 8, 9, 10x. And so did Zooms and Pelotons. I mean, they all did. And then they all came crashing back down.
Of course. So here's what's really fascinating. Looking back, all these trades were like Mr. Obvious, right? But they actually weren't. I mean, yes, they were. But for some reason, why did some people see it and actually do it, and 99 of other people just didn't? And the reason why is because of noise, right? People are focused on the wrong things. They're watching CNBC. They're focused on the macro market. They're listening to talking heads that don't know what the hell they're talking about. Listen, there's virtually none of those people can show you anything in terms of outperformance in the market, like of their own personal, like they've achieved like literally zero, like, and I mean every one of them, right? Like,
agreed.
So it's like we're listening to these, lack of better words, like kind of like financial imbeciles when it comes to trading, and people just get caught up in just noise. And I love it. I'm here for it, right? Because I'm just like, I know that the rest of the world is caught up in all the news cycle of all the noise, and I'm on the phone with RV dealers, right? And I'm just in those trades like 45 days early, basically, right? And it wasn't like you didn't have like a 6-month window. You had a multi-week window to get in, because eventually it becomes really obvious, right, to the whole world.
I remember like Camping World. I think that got down to like $2 or $3 a share, and then went up to $25, $30, $35 a share.
Totally, absolutely. And so there were just a ton of trades like that, and like I can talk about them, but they're just all super like every trade I can tell you about these trades, and every person watching this would be like, I knew that. Of course you knew that. I mean, you saw it just like I saw it. None of this stuff is difficult. You don't have to have a financial pedigree. You don't have to work for a hedge fund. You don't have to have gone to Harvard or Wharton. Like, dude, in fact, all of those things would have put you in a bucket to be distracted by other stuff to make you not see this. So that's kind of the message I like getting out to people, is that we are just better suited to see the world unfold as it's happening and connect dots because we don't have to deal with the noise, right? And by the way, we don't have to make an investment every day. Like you could invest like every other year. Just pick one stock every couple of years when you find something great. That's a totally fine way to do this. And, I don't know, I don't know if you work mostly with technical traders or what, but like it drives me insane when it's like the majority of methodology that gets pushed out to the world. Like, you want to be an investor? Like, okay, we got technical investing, which is all this crazy stuff that 99% of it would drive 99% of people nuts to have to even look at that stuff every day. And then we have fundamental investing, which to be like an excellent fundamental investor, to break down financials, right? To like see what other people are not seeing in financials. Like, it's time consuming and really difficult. Like, neither of those methodologies are appropriate for 90.
I'm somewhere between you and fundamental. Like,
Yeah.
I still need the company to have strong fundamentals, strong growth, improving margins, that sort of thing. But I look for trends too. Like my biggest holding is Celsius, the energy drink company. I've been in that one for 3 years and the stock's up 600, 700% for me.
Great trade.
CROX is a big position. Uber is a big position that I started last summer. So, I mean, I'm looking for those sort of trends as well, but I also have a more diversified portfolio. I mean, I have 20 positions at a time rather than just one or two, because I have a couple investment services. I can't have my subscribers, getting too concentrated, because if I'm wrong, then they can blame me.
And I think that makes total sense. And I do some fundamental stuff, too. Like my thesis is that more, and not always, but more often than not, the market will generally price in most of the fundamentals. So most of the fundamentals are priced into the stock. So like if I have information that's truly meaningful, the fundamentals are mostly priced in. This information's not. So I'm just going to assume that the company has subpar fundamentals. It's priced for subpar fundamentals. If it has great fundamentals, right? But what's not priced is this. Is
a surprise.
Yeah. So either way, it's that new element that I've detected that's going to move the company up or down from where it currently is. So like, and by the way, that's an assumption, and it's not always true. And there are some times when the market just totally misses on the fundamentals, and you can get screwed if you're not paying attention to it. But it's part of the process.
So during the pandemic, it sounds like you were investing in the stuff that benefited from the pandemic, which included software, cloud, probably all sorts of different sectors. But would you say, other than the pandemic, like nowadays, do you kind of fall into consumer discretionary stocks? Because that's what people are talking about on TikTok, Reddit.
So not necessarily. And I know that's kind of what most people would think when I describe observational investing, but you would be shocked. Like, observational investing touches every single industry sector. In fact, one of my biggest trades of the past 5-6 months are in two companies, Novo and Eli Lilly, the two companies behind the new semaglutide drugs that allow people to lose 15 to 25% of their body weight in just like 6 months. It's like crazy stuff. Anyway, so that's like a mega trend that was initially both detected and vetted purely through social media, and yet it's a pharma play. Okay. So, and it's worked exceptionally well. Connected to that, one of my current biggest holdings is a company called INMD, INMD.
So I'm a big shareholder as well. So, and I saw you talking about it on Twitter, which I like. Yeah.
Yeah. And so like, and that's not, I mean, I guess you can say it's consumer discretionary. But it's a device that results, benefits from consumers coming in and having procedures done. So I just love these. I love these narratives where I can see so a lot of what I do is I look at data. Obviously, I look at, the amount of conversation, the quality of conversation, the depth of interest, but you also need to understand the narrative behind the data. So, a lot of the people in my community, a lot of people that do what I do now, will focus a lot on Google Trend data, which is an exceptional. I always tell people, like, it's the number one place you should go to both observe change and help you vet kind of what's happening in the world. but it's still just kind of raw data, and you have to understand the narrative that is behind that data, because a lot of times the narrative isn't always what you think it is. That's pushing more people to search for that word combination, right? Or that product or brand. So that's where you have to really get deep into conversational analysis. And which is why I tell people, like, the gold mine for me of data right now is TikTok comments. TikTok is, by many measures, the world's largest, kind of most active social platform where people are speaking about things that they do
But
and
TikTok
love and
still
buy.
skews to a younger audience, doesn't it?
It might skew to a younger audience, but there are, if we have about 100x more old people than we need to be able to extract the type of insights that I want to extract. So, like, the level of comment engagement behind any type of granular subject on TikTok is so insane. You might only see like 80 or 90 videos, but each of those videos might have thousands of comments. So the comments are where, okay, let's say 70% of the comments are young people, 30% are older. With that 30%, like, there's plenty of older people
Right.
talking in the comments. So yeah, it skews younger, but it's kind of irrelevant for what I do.
Do you go looking for stuff on TikTok, or you just kind of wait for the videos to find you?
Both. No, both. So yeah, I talk about this in depth within Jack Schwager's Market Wizards book, The Unknown Market Wizards. But I essentially have these things called, I call them umbrella tags, and I use the word tag. I had a company called Ticker Tags that I founded with my business partner Jordan, who's on Dumb Money, and it was the world's first social intelligence platform for investors, but we only marketed it to hedge funds and banks. So we had the world's largest hedge funds. We had Bank of America, Jefferies, and we essentially we had a partnership with Twitter, and we would data mine Twitter for the mention frequency of about 1.5 million word combinations. Wow. That were representative of all things that were meaningful to thousands of stocks that were in our database. And we would essentially detect anomalies in speech patterns around products and brands and trends, right? And then we would connect the dots back to publicly traded companies where that was meaningful. And we basically helped hedge funds do that. So I still do, and I sold that company to Jefferies Bank, but I still do that in a manual way by using what I call umbrella tags. So I'll just give you a really like obvious example of an umbrella tag, like sold out toy, right? So people that use the word sold out and toy are probably talking about a toy that's sold out, right? So
that's in high demand.
Yeah. So if you search for those words, then that will take you theoretically to the toy that's selling out, and then you could discover that way without waiting for it to organically show up in your feed.
Right.
You can kind of more proactively seek out and detect things as they're happening quicker.
Can you still mine that data from Twitter, or is it now cut off?
So no, I sold the company. Okay. I had access to the platform for years. I no longer have access to it, and I don't even think they're utilizing Twitter data in that anymore. Twitter data for what I do has become almost worthless for the most part. So Twitter used to be a place, for those of us that are old enough to remember, where people did speak about what they wanted and what they wanted to buy and what they did that day, what movies they were going to watch that weekend, all that stuff. That just doesn't really happen on Twitter anymore.
I
a little
agree.
bit it does. Twitter's now about news, politics, a little bit of business, right? But it's just not that place.
Right. I mean, I've been on Twitter for 15 years. So I remember way back when it was just you and a couple friends talking to each other.
It was awesome. It was like the first place where you just let it all out, and now it's just not that place anymore.
No. Yeah.
Because there are better there are better places to do that, and a lot of the way that we like to do that is initiate it through streaming video and then commenting on it, right? And the comment is where it happens. So TikTok's that place for me. So no, Twitter, it's just kind of worthless for that now.
Outside of InMode, what are some of the other ideas companies, products that have come across your radar recently that you're digging into?
So another monster trade for me that I partially but not fully exited this week was Molson Coors. That was driven.
I know where this is going.
Yeah. Well, it's interesting because it was driven mostly, but not entirely from the Bud Light drama, right? So
Wild. Yeah.
and so the bottom line is like this quarter was an insanely breakout quarter for Molson Coors, and there was zero data from the whole post Bud Light drama. So, but Molson Coors just has a number of things that are happening right now. They have like the hottest beer in the UK. Like it's a beer they just came out with last year. And it's like trending so hard. It's almost obscene that they made this beer. It's like kind of like a fake Spanish beer. And it's like the hottest thing in the UK right now. They also have an amazing partnership with the Simply brands, like Simply Lemonade, and they're doing Simply Spiked, which came out last August. And is
that like a hard seltzer then?
Hard seltzer. It's doing phenomenal. They're still doing really well with the Topo Chico lineup, which is what I initially was. I was like pumping Molson Coors prior to that release because living in Texas, I have a unique perspective of how big that Topo Chico brand is, and Wall Street certainly didn't. But that's still crushing it for them. I mean, who could you have better than The Rock for an energy drink? So their ZOA Energy is still doing really well.
Do they have an ownership stake in ZOA?
Oh yeah, so they are the manufacturer and distributor for ZOA. That's
okay. I didn't realize
that's them. Yeah. So basically they have everything. They're just hitting on all cylinders, and then you have a recessionary environment, right? That kind of benefits cheaper beers to begin with. So that's actually another positive. And then you have this event with the Bud Light thing. And again, this is the type of thing that I think Wall Street doesn't fully appreciate, because most of the time when we have a boycott like this, 99%, it comes and it goes really quick.
Right. 3 weeks later, no one, everyone forgets about it.
Yes. And so you can't really, you can blame, but Wall Street's just making that assumption. It's coming, it's going to go. Most of those guys live in New York, East Coast, right? They don't get it. They don't understand that. And by the way, I am super apolitical, so I could literally care less about the politics behind this. I don't take a stance on it. But they don't understand the degree of frustration and anger and just that exist right now in this country with a lot of males that are beer drinkers, that either they live in rural areas, they live in the South, they might be conservative, they might be religious. There's just a whole number of reasons why they are at conflict with what went down with Bud Light.
And they've been drinking Budweiser since they were teenagers.
Yeah, and the problem is they don't have a way to lash out. There's nothing they could do about any of this stuff that's bothering them. And here comes this Bud Light thing. And it was just like they just delivered to them on a silver platter. And they're like, yes, I now have a way to fight back. And it's almost like a stress reliever for them to be able to go out and buy a competing brand and say, I'm not supporting that. I want to see how much damage we could do collectively. I don't see that ending in the next few weeks or the next few months. Okay.
I've heard that restaurants are sending kegs back to the distributors, beer kegs back to distributors.
They are. And like, here's the thing. So we carry it at my restaurant. I have a restaurant here in Dallas. We carry it. We still carry it. Bud Light sales are down. Ready for that? Now, granted, my restaurant's in a conservative neighborhood of Dallas, Texas, right? My Bud Light sales are down 67% in the 3 weeks after this drama hit.
It's a big number. Wow.
Ready for this now? We already know from credit card receipt data that's been surfaced through research reports from Wall Street that Coors and Miller Lite sales, I think at grocery, are up 16%, which is kind of astonishing. At my restaurant, Coors Light and Miller Lite, Coors Light and Miller Lite sales are up 30%. 30%. Okay. So let's just say that across the board, they're up 15% off premise and on premise, right? Off premise being grocery, on premise being and C shop store, on premise being restaurants, bars. 15%. I think Coors Light and Miller Lite are roughly half the company for Molson Coors, roughly half, maybe 60%. Let's just say it's half. That's like a 7.5% bump in revenue for the company. So that sounds ridiculously good. Let me make it even better for you. So the beer industry, the way that it works is there's exceptionally high fixed cost. So the fixed cost of a beer beer manufacturer is really high. Once they cover that fixed cost, which they all are, any type of like massive demand over and above that, the margins are excessive. It's insane. It's actually insane. So this excess beer that they're selling, that's 7.5%. It's not just contributing an extra 7.5% on profits. It is, I don't even know exactly what it is. It's going to, I think, just do something insane to their profits this next quarter if it sustains. And I believe 90%, 95% chance, I think those levels will sustain the entire quarter that we're already a month into.
I can't wait to see some of the numbers coming out when both companies report.
Well, they reported yesterday and today, right? But they didn't report on this yet because this all happened after the close of the quarter.
Right.
So you have to now wait another 3 months, but you don't have to wait because the reports come out every week or two on the transaction. So we already know what's happening. The question isn't what's happening. The question is, how long will it stay at those levels? And I think it's going to stay at those levels for a while. The risk on Coors Light and Miller Lite and Molson Coors is that Bud Light has so much inventory. Right now, they're giving a lot of that inventory to their employees. They're giving cases to every distributor that has an employee. Give every employee a case to take it home as a, hey, we're sorry. But like at some point, I think they're going to deeply start discounting that Bud Light. And that will be the telling time. Are you willing to spend $3 more on a case of Coors Light over Bud Light, or is Coors Light and Miller Lite forced to reduce the pricing to match that? And that would be the negative that would like put a damper on the party here.
I just picture like, three guys going to a Rangers game or, pick your ballpark, pick your, football game, whatever. And if they're sitting there getting ready to order a beer, I just don't think they're going to order a Bud Light.
They're definitely not. And here's another element to the story. Not everybody is even political or even cares about this subject matter, but you won't do it for peer pressure, right? So like you don't, because if you're not drinking a Bud Light, people are going to think, well, he's just drinking another beer, like a Coors Light, Miller Lite, whatever. You're not making a political statement. But if you are drinking a Bud Light, it kind of feels like you're making a political
one, kind of.
Yes. So even people that could care less, a lot of those people are not going to order the Bud Light in pub, at least on premise at a stadium, a bar, restaurant. They just don't want to deal
with drink it at home, just not in public.
If they love Bud Light, they'll drink it at home. But the truth is, like, people that are drinking light domestic beers, they don't really care about taste.
So do you ever do these pair trades where you'll short the one, like say it's a story like this where you think one company is taking market share away from the other, will you go long, in this case, Molson Coors and short Budweiser? Or
I would, but I'm not here. And the reason why I'm not here is because for two factors. One, the reopening of China is a massive tailwind for Budweiser, as a company. So AB Beverage, like, that is such a big tailwind for them that even if their Bud Light business in the US gets crushed, they either might not feel it, or the degree to which they feel it will be very small,
minimal,
right?
Okay.
So, and then also they're getting some shift to Michelob Ultra as well, so that people don't even realize is part of the same parent company. So I don't. Budweiser is a global, massive global company, and globally, it's not as big of a. This Bud Light thing isn't even as big of a deal, and they're really going to have a huge tailwind in China from it reopening with all the beers that they sell there. So, like, it's a much harder call on Budweiser than it is Molson Coors, which is primarily a U.S. I mean, they're global too, but they're primarily a U.S. company. And they're in the US, they're primarily those two beers. So it's just and then everything else that they're doing is also crushing right now. So it's kind of like it's a beautiful trade. It's a beautiful trade. Like, and the only concern I have besides that discounting concern that could happen at any moment in time is just the market as a whole, like the macro environment. You know, we have the banking issue. We have the debt limit thing that's going to happen over the next few weeks. A lot of volatility in the market. And if the market gets sold off, everything gets sold off. So you kind of don't want to catch yourself levered, especially with options, and just get destroyed because of a market scenario.
Well, I was going to ask you, so I mean, you've made tens of millions of dollars. Do you do things any differently? I mean, are you a little bit more conservative now with your trades, the size of your trades, you know, using equity maybe instead of options? You know, do you do things differently now than you did a few years ago?
I do. Part of the reason why I do is because my accounts are kind of like split. I still have my personal trading account, and I do utilize leverage and options in that account. But I quite honestly, I have a lot of my money that I put over to a foundation, a charitable foundation for pediatric causes. It's something I want to do my entire life. It's something that's really important to me. And unfortunately, the government, once you put money in a charitable foundation, it's not my money anymore. I manage it for the foundation. I'm trying to grow it. You're not supposed to invest with leverage. You really can't even take you can't even take money out on margin. You can't really do options. They look down upon that. So unfortunately, I'm not able to leverage those types of tools that I have, and I still do with my personal account.
Okay, makes sense. Where's the best place for us to find you? I know big YouTube channel. How often do you guys put out new content?
I'm active on Twitter, which is at Chris Camillo, and we also have Dumb Money TV on Twitter as well. But Dumb Money Live on YouTube is where we're at. So if you go to dumbmoney.tv, it will take you to all the links, personal and for Dumb Money. So just go to dumbmoney.tv, and that will show you all the stuff. And we try to do a show. We're trying to do 2 shows a week on YouTube. It's really, for us, it's about having fun and really engaging with the community. But like I said, our community finds as much stuff as we do, and it's all on the dumbmoney.tv/Discord channel. And like, we have a lot of fun with them, and we're just we're very fortunate to get to do this.
I mean, that's a huge community, 40,000 people. How do you prevent it from getting too noisy? I mean, from spamming
It was super noisy during the pandemic, but honestly, it's cooled off so much that the people that are left in there, for the most part, are super cool, really good observational investors. It's like a small group of us that are like active in there.
Take it serious.
It's not noisy anymore. It was a pandemic thing that it went nuts. So yeah, I mean, that's it. But Twitter, I mean, I'm trying to be more active on Twitter. But my life and my trading and my ideas are pretty much an open book, man. Like, I kind of talk about, it's wild. Like, I talk about everything. There's no paywall for me.
I mean, you want people, I mean, if you're building a big position in a company that you have conviction in, I mean, you want others to follow you in, right?
No, I mean, I would prefer to have retail investors get a piece of the upside rather than all institutional. But so I don't need anybody to follow me in, because I'm trading on something real. So when that real thing happens, that stock theoretically is going to move, right? So like, it doesn't matter to me. Like, I don't need people to. I don't sell into people buying into my
right.
idea,
Okay.
Right? Like I'm gonna sell once like on
Once
Coors.
Wall Street jumps in, that's
Yeah,
the
so like we did an entire show a couple weeks ago on the Coors, the Molson Coors thing. I didn't sell anything. I sold my position right after earning, and I only sold 2/3 of it. I still have a third of it. I'm probably going to buy in more here once the market settles a little bit. So yeah, I mean, I don't care about that stuff.
So it's kind of like find the opportunity, build a position, wait for Wall Street to figure it out, and then let Wall Street be your exit liquidity.
Totally. I mean, a combination of just anyone that's trading based on the information that's now fully out there, right?
Right.
So, and like I said, for me, we will never fix the income gap for people. That's just not going to happen. The wealth gap, on the other hand, totally fixable. You just have to become an investor. You have to join you have to join the investor class. So guys like you, like doing what you do, you know what I'm saying? Just bringing people into the investor class. There's like, everybody's going to find their person that inspires them, that helps them in a way that that is, suitable for their personality. And so I love it that there are people like you and everyone else that are doing this. Just get people into the investor class.
And if someone asks you, like, should I do this myself or should I put it into an index fund? What do you typically tell them?
If I had a family member or friend, and I do, this happens all the time. They're like, Chris, I just can't think about this stuff all the time. What I tell them is, dude, just have and I'm not a financial advisor, but I tell them like, dude, if I were you, I'd just have my money in an index fund. And then when I saw something, I would pull some out to invest in something I really believe in, I'm passionate about. Like, you can do both.
Yeah. Okay.
Like I said, you only need to have one good pick every couple of years. And I think the issue is there's a mental block with people investing with leverage and something that nobody else believes in, because why would you know this if no one else does? It takes time. And so I teach people to almost have a separate account to where I call it the big money account. And it's money that maybe, you delay a purchase for 6 months and then the purchase is cheaper. So the money that you saved on the purchase, you take that and you put in the big, because you're basically waiting 6 months so that you can get money to put in your big money account so that someday you can make a levered high risk investment in something you believe in, right? So you get your hair cut every month, get it cut every 5 weeks. So, you have someone mowing your lawn, mow it yourself. Do the Graham Stephan thing and like drink coffee from your house and from a coffee shop, but not to save $3, because if you think of every dollar, and this is what I do talk about in my book, Laughing at Wall Street. If you think about when I had that first 20K, I grew it to 2 million in 3 years. Exactly. So if you think of every $20,000, every dollar as $100, because I 100x my money in 3 years or whatever, by taking risk on things I believed in, then you're not saving $3 on coffee, you're saving $300 on coffee. So is that coffee really worth $300 to you? And yeah, you want to get the new TV. It's like $1,300, but it'll be $1,100 in like 6 months. But you want it now.
Right.
But
and what is that 1,300 going to grow into over the next 5 years?
Well, no, that's 200 in savings. So like, is the 200 in savings worth waiting 6 months? Maybe not. But that 200 is actually 20,000. So is it worth waiting 6 months for the potential to get 20,000 in a few years? Hell yes. Even clipping coupons. Like, most of us don't clip coupons. I don't care about $1, but $100, I would clip a coupon. It is $100. I mean, you got a reasonable shot at turning that $1 in savings into $100 by investing in levered options on something you really believe in and just doing that 2 or 3 times over years. Like, so think about every dollar as $100, and all of a sudden you're clipping coupons. Maybe you're mowing your lawn. You're not going to Starbucks as often, and the money, dude, that adds up quick. And now you have a separate account. I call it in my book the other people's money account, because it's all money that came from other people by making trade-offs in your life. So now you have an account where only thing you're allowed to do with that account is take a risky investment that's levered. That's it. That's the only thing you're allowed to do with that account. You can't touch it for vacations. You can't touch it for college savings. You got that money elsewhere. This is money that you sacrifice from those other things so that you could reach escape velocity, financial escape velocity in your life. Anybody can reach escape velocity financially, but you need to have the money to do it, and you need to be able to take a risk.
Right.
Okay.
And put in the work to do the research so you know how and when to take a risk.
Yeah, a little bit of work. But honestly, you could even, like, if you want, just watch people
Or join your Discord room.
Yeah, I mean, there's people doing the work for you. You just kind of like, okay, you still have to you have to make your own decisions. You do a little of your own homework, make your own decisions, but you're not alone in this game, right? Like you're not alone. Like I think us retail investors, what's really cool. I mean, dude, I was on message boards, Yahoo Finance message boards in like the late 1990s. Okay. Like I know what it's like to type in a message on a message board of a really big stock and then wait 3 to 4 hours before someone else types another one. Okay. These kids, they have no idea. And I talk to Howard Lindzen, we're friends all the time about this because he used to be 25 years ago doing the same thing. We're a community, and we were a community back then, and we're like 1,000 times the size now in terms of how many retail investors there are because it's so easy to trade. But it's so cool that like we all want each other to win, right? Like we share stuff the same way that institutional traders they share ideas.
They do. Yep.
So like we need to need to think of it like that. Like nobody is alone in this game.
Well, Chris, thank you so much, man. I really appreciate your time today. I'm impressed by the sneaker collection as well.
Thanks, dude.
We'll do this again.
Absolutely.
Okay. Talk to you soon, man. Congrats on all the success.
Thank you.
Talk to you soon.